The following is a presentation of TFNN. It is now time for Trade What You See with your host, Larry Pesavento. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Larry Pesavento.
Hi folks, Basil Chapman sitting in for Larry Pesavento on vacation this week, and usually I do the 11 o'clock till 12 every day, and that's the Tiger Technicians Hour, and my service is the opening call. It's a daily rundown on what I'm looking at in the market and all the positions that we're either going to try to buy or we're looking at or have missed, which has happened lately, and a synopsis of the market today. What I do is a section that I have called right here. First of all, I show the Dow chart every single day with the Chapman wave methodology. Whoa, what is the Chapman wave methodology? Let me just quickly do this if I can find it. All right, so that's there it is. Okay, coming up. And it is right here. In the Chapman wave, what you look for, this is actually not current. This is just from the other day. I just wanted to show what we do. We look for the most lowest, obvious, identifiable low bar. Merely start a count, and each successively higher peak goes to peak A. 1 penny above starts leg B. There it is, 1 penny, in this case 25 cents, because it's the E-mini futures. Pulls back, makes a peak, even though it's only a little peak. And then it goes to leg C. Pulls back, then it goes to leg D. D is what you expect. D is what you want to see. D is where you expect also that there could be, doesn't have to be, but there could be a deeper pullback. And look at that pullback. And that's that A, B, C, D. Oops. There could also be a recycle. So D, the fourth highest peak, is where other things can happen. Well, let's get rid of that. And now let's go back to what I was talking about. So what I show in this quintile, these 5 different panels, is the 120-minute Dow chart. And I said, if this is leg E, you got to be a little careful. If it's leg A, it's very positive because it should only pull back for a little bit and then start leg B to the upside. We'll know soon enough. And I gave the parameters. And I did say that the support was in the 18,100 to 18,000. Oh, I didn't mean 760s, I meant 60s. So there it is. And we've got also the VIX index right here. Discussed that at recent lows, over 14.70s, market slides, under 14 it rallies, and right now we're at 14.85, so the market's still somewhat weak. And this is the short-term trading index developed by Richard Arms. I use it differently. I use certain numbers that I've developed over the years to find out what should happen over the next day or two. In this case, this particular signal right there, having gone to 3.24 on Friday, I'm not sure if it was options expiration related, but I still use it. Said that within 2 days, we should get a very sharp 7 to 9 point rally in the futures, which should translate into a big move, a reversal, upside reversal in the cash indexes, and we'll see if that's going to transpire. We're in leg C right now in the Dow, leg C in the daily S&P, unless there's a new high made today to extend that leg C. This is called the floating letter, and that stays C all the way until you actually make a peak. If today there is no high above Friday's high of 2110.61, if it matches that, it remains C. If it goes a penny above, it's still in leg C. If it's 1 penny below, it makes a peak C. So I thought I'd just get that out of the way. Now let's go to the numbers. The E-minis are down $1.50, really not very much. Went from 21.08 to this morning's low of 20.99. So that's the low right there. And you had a rectangle formation here. Now I think you're developing a rectangle formation. Well, I'll keep that. Let me just keep that there. And let me just show you what we're doing. At least this is what I think we're doing. Right there. We're developing a little rectangle. Going from the top to the bottom, maybe up to there, and then we pull back, and we'll see where the pullback takes us to. So that's that. And I because it's Larry's show, I'm just going to grab a wheat chart. Larry's always looking at these different commodities. And wheat had a leg A, and then a leg B turns into a peak B. And now the pattern we're looking for is the lowercase h pattern in the Chapman wave, which just looks exactly like an H on its, with a bit of a back slope like that. That's the H. We used to call it the dreaded H because a lot of people were bullish gold at one particular point when I was discussing my techniques. And I said, if it goes below that left side low bar, watch out. That could be quite serious. You saw that right there. Look, here's a 120-minute chart. There's the H. Broke underneath and went whoops all the way down. Here it held and it bounced. Here it's failing. So it's a very important pattern that I look at. So wheat is pulling back. Let's see what corn is doing. Corn is doing the same thing, A to B, and then it's starting to make maybe a B minus. And most importantly, is look at crude oil. I didn't discuss that this morning in my show. Went to an A. It's the same pattern over and over. Looks like it could be failing right here. There's the weekly chart right there with the H pattern that I already drawn in a little while back. Right there. So crude oil has to really get energy to the upside to break into the 56s, and right now it's at 49.33. It needs to break and close above the whole 54s. It needs to be in the 55s to show a little bit of rebound potential. That's that. High-grade copper. High-grade copper is A, B, C, holding not bad, but the weekly chart says, wow, you are really struggling, Mr. Copper or Miss Copper. So that's that. I had a quick question, HUM, when I look at HUM, Humana. Oh, Humana. I haven't looked at Humana for, you can see I haven't even notated it. This is one of those that I can't say. I notated it, but the notation disappeared. It went to A, B, C, D, recycle, A, B, C. Yeah, Humana looks fabulous. Some of these companies in the healthcare, right? Let me see the exactly what they do. Humana, Humana. Louisiana, Kentucky-based for-profit American managed healthcare company. Yep, I just doing great. UNH. Yeah, so this is a big move. This is in the weekly show. Let me just do this. Wow, let me put that down in my book. HUN, arrow up. A, B, C. Well, we got to go to the lowest low bar, otherwise you're messing around. Okay, so that's A, B, C, D. A, B, 76, C, D, E, F. A, B, C. Yeah, this is a, wow. This is a D, but it's such a big D, and this is absolutely news-related, which it probably is, says that there's a real good chance that it's going to go higher. Wow, everything about it is very good. Yeah, Humana looks great. I would say that the 155.75, 10 points lower, 9-period exponential moving average will be hit, but it's going to have to take a little while before it does that. I suspect this has got a pattern that's going around to 167s, maybe, somewhere around the 167 areas at 165.12 right now. Okay, so now what I want you to do, so we look at copper, look at the dollar. The dollar's just in this trading range. I drew the rectangle a little while ago. I said it's just in a high-level consolidation, and that is going to start to narrow, and we're going to see whether it's going to make an A, B, C, D within that framework. But whatever it is, this pattern says you're going to go toward, to, or just above the previous high of 95.48, and then you should fail and come back down. And if you pull back more than to the last important peak, which is in this case 95.12, and you close under it instead of above 95.48 decisively, that says be careful, because you're going to start going towards the lower end of the rectangle formation. And that matches what we're looking at in the euro dollar. In the euro dollar currency pair, trading band, sideways move, there it is. Look at the USD JPY, the dollar Japanese yen currency pair. Look at this pattern. It was doing really well, and then it suddenly stormed into a peak C, and then whoops, pulls back, and now it's starting that rectangle pattern right here. It needs to decisively say 118.89. It needs to get very much into the 119.60s to show that it's got the gumption, it's got the energy to go back. There's that weekly. I drew the arch formation in a sideways trading band. Now let's also I want to go to gas, natural gas, leg A, leg B, and leg C. Oh, this is not bad action. Good. B, C. So now I can put an up arrow. And it suggests that it's going to struggle, but it should go a little bit sideways and then pop to the upside. Whether it closes Friday above 2.98, which is the 9-period exponential moving average of the weekly chart, it's just hard to say right now. Meantime, I think that we're consolidating. And that's really important. The consolidation that's taking place after such a spectacular turnaround from over 100 down to 150 points higher in the Dow on Friday is fantastic action, and we've got to respect that. A couple of things are also happening here. Let me just double check. Let me go over here to do my double checking. Yeah, you know what's important about this? I want to go to Alcoa. Alcoa was doing spectacularly and now it's starting to fail. And that tells me that the deep cyclicals like Alcoa and USX Steel, United States Steel, they were in a sweet spot, but it was only briefly, late mid-Jan to the end of January, maybe beginning of February. But now they're really stalling out. And it says that the autos like General Motors, which is acting quite nicely, it's unchanged at 37.65. I should mention for disclosure that in my newsletter we are long. And Ford, which we'd like to be long, we were long, but we we get stopped out for a little gain or a little bit of a loss, and then it takes off, has held beautifully. And when I was down south over the weekend, I'm going to sneeze. Let me just get this. Hope I'm back. Can you hear me? I think I pressed the right button for the sneeze. If I didn't, excuse me. Is the sound back? Sound back? I'll ask for the question mark. Somebody has to. Yes, good. So then I managed my kill button very well there. That, you know, is the strength that we're looking at in the autos, FCAU. This is Fiat Chrysler. FCA, I typed in the wrong place. FCAU. I wondered how it got into the den so quickly. Look at that. A, B, C, D. It had a recycle. This is, folks, this is just a fantastic demonstration of the Chapman wave. Look at that. That is, look at that. Leg D. We just recycled up after an instant restart into another leg D. And these usually go to an E or an F. Wow. Fiat price is doing fantastically. I'll be right back. Basil Chapman. And I'm taking the place right now, if I can, of Larry Pesavento. At least this is the time I'm taking.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartlys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi folks, Basil Chapman. So this is going to be very interesting. Dow's down 51, S&P's down 340. Dow's a little bit weak. I think it's because of Boeing. What was I looking at before I went to the break? Oh, that's right, Fiat Chrysler, and was looking absolutely fabulous. And my suspicion is that it will continue to move a little higher. I think a big chunk of the move for most of the indexes and stocks is done right now. Now it's going to be a slower process, just moderate high. People say, well, what are you looking at before we turn down? At this point, I think maybe 1.5%, maybe 2.5%, maybe 1%, 2%, I'm not sure, higher. That's with having to make a peak C in the S&P, even if it's this week, and then so that means you need a lower high bar for one full week, and then leg D starts. It's kind of what I'm looking at here. And IBB. Let me check. Quick question still in leg. I'm calling this F. It's extended. In the 120-minute chart. And these are all to go together. Apple, IBB, the NASDAQ iShares, Biotech iShares, they're all working in concert, and it's fewer and fewer stocks that are actually leading the way, but they are leading the way, and that's all you want to know. You don't want to get in the way of the freight train because it ain't fun. So let's do this. QQQ is what Greg asked me about QQQ. So let me go to this because I want you to show you how in concert these different indexes and stock sectors are working together to be able to help the QQQ series, which is the NDX 100, basically the top 100 stocks in the NDX. or the highest priced, highest capitalized stocks. So in this particular instance, what you got, the PowerShares QQQ Trust Series 1, trading at 108.40, having made a high of 108.46. And that 108.46 so far is not above the 108.47 that was made Friday, the high. That 1 penny makes a difference. If it goes to that exact level, it continues leg B, because it isn't a peak. A peak is made by being 1 penny lower, even if it's 0.0001 lower, if you're using these 5 or 4-digit currency pairs. So let's go back here. We were saying the QQQ series, if you look at this, this is interesting. If you had to look at this in a Fibonacci sense, is this leg 1, wave 1, wave 2, wave 3 unfolding, or is that wave 3 with a little sideways zigzag pullback, and now we're in leg 5? My suspicion, based on what I'm doing right now, says that the consolidation at this very quick peak A to B to C to D in the QQQ series 120-minute chart, with the stochastic making a lower high at 96%, lower than the 97% that it was, or 98 it was just recently. But the MACD having a deflection to the downside says you've got to be a little careful here. We could still have some form of a sell-off towards the end of the day if that Chapman wave trend gauge doesn't kick in until tomorrow. It's tomorrow that we could get a sudden swoosh to the upside after early weakness, if there's a weak close today. And if that's the case, then I would suggest that the QQQ series trading 108.37 has 107.28 to the 106.74 area as a cushion. And it turns out that 106.80 is the 9-period exponential moving average. My eye says that it should not go there. It should go to about 107.42, somewhere around 107.42, if there is a pullback between later today and tomorrow. But so far, this is really good. This is nothing here. I would not be shorting the QQQ because it's so strong. But what I would be looking at is where to look for an entry point if you want to go long the 100% QQQ or the 200% or the 300% long, treating it as a trade, because I don't think it's going to last more than 2 weeks as a full trade if it works out, but it might only last to a peak D in the daily and then come back very sharply and come back under the into the 105.93, 105.15 area. So, Greg, I hope that helps you. Let me just sum it up a little bit better than that. QQQs, what happened? Hello? Anybody home? There you go. Incorrect symbol. Now, why should it do that unless it's got a multiplicity? There it is. So cancel. Nope. Cancel. I don't want to cancel that. I want to get rid of it. QQQ PowerShares, that's a good one. Oh, that's where I typed in. I wonder where it was. I typed in good one, and then I typed in L. Ah, that's funny. It went into the technicals, format symbols. Now, look, I'm going to close it, and look what's back. There it is. Thank you, L. Sounds like the song, Brother Can't You Die. Okay. Dow's down 54, S&P's down 390. I'll talk a little bit more about the cues in relation to the weekly chart. This is going to be very interesting. Basil Chapman sitting for Larry Pesavento. We'll be back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com, educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi everyone, Basil Chapman sitting in for Larry Pesavento. Larry's on vacation, and I was able to do the show today, and it's my pleasure to be able to do it. And we're going to go straight to Robert in Chicago. Hi, Robert. How are you?
Oh, very good, Basil. Thanks for taking my call.
My pleasure.
So, Basil, I wanted to congratulate you about 3 weeks ago, maybe. It was before the Whole Foods market came out with the earnings on the 11th of February. A week or two before that, you were very bullish on the stock, so I want to congratulate you on that view.
Thank you.
So now I want to have, if you can look at it again on a longer term, kind of a monthly chart, and I am long it. I kind of want to know, my question today is two questions. Where would I put my stop to stay long on a longer term view? And then the second question, do you see this thing going back up towards 65?
Okay, great questions. And first of all, let me just say thank you very much for that compliment, and I appreciate it. Now, what we're looking at here is Whole Foods market, WFM, trading at 57.17, up 45 cents. It needs to get to leg D in the daily, which would be above 57.57. And at that point, in the daily chart with leg D, we're looking at a stochastic that's at 88% now. That will probably push it to 89%, and the MACD is still very strong. 9-period moving average support is at 55.98. The weekly chart, however, is the one that is really, I would say it's impressive, but it's more than impressive. And the reason why I say that is that breakout that it had back in November of 2014 from 39.30 to 47.49, it has not come back even to the following week consolidation low of 46.32. Instead of just steadily moving up with a MACD fast moving average showing the price of the stock itself just sitting well above the 9 EMA, steadily moving higher. I like it very much. I like it in the sense that the stochastics at 93%, and now I want to show the full chart formation. And what I'm going to suggest is this, and now this is where I always put the technique on the line. Let's see how it's going to work, because what I'm looking at here, I'm going to do that, and that, and then I'm going to go left side and see where I can do safely right there. I'm going to make a plumb line, and the plumb line is what should be the lowest or the highest point in a cup or an arch formation that says the ellipse, the sideways move of the cup, the left side of the cup, should then begin to match in time the right side of the cup exactly. Now, it happens often enough that I've made it a technique, but it's a technique that every once in a while I have no choice but to choose a different plumb line, the center line. Why? Because either the price has moved to a point where it doesn't make sense because it's never going to reach there in the short period of time, or it's just way too long. So I have to find another candle. At this particular point, there's no other candle to find, and I'm going to say to you, the week of April the 3rd, February, March, April, that makes sense, yeah. The week of April the 3rd, it should be close to between 62 and 65. And it's trading at 57 right now. So let me just also draw this in to see if I'm doing this accurately. Normally I would do the plumb line from the left side low bar. In this case, it would be right here. So that doesn't even come close. So I can actually choose the low bar that was made right there. That comes close. So here are your clues. Now, I'm anticipating that within 2 weeks we start to head down. It should be a fairly sharp decline. But in the meantime, I have a trend line and the weekly chart that says this week or next week, you've got between 60, let's call it 60 to 61, is a potential. Now, I don't know what could move the stock 4 points in a week and a half or 2 weeks, but the way it's looking right now, there's very little weakness. So I'm just saying that I'm putting that out as a particular technique that you could use, but to get the proof of this, I don't know how it could. We've already had earnings, so I don't know what surprise it could be in the next couple of weeks. It's quite a few weeks, month and a half, to be able to do that. But that's what I've got. Now let's look at the downside. The support in the weekly chart, the daily is 55. Let's call it 56 to 55 in the 9-period moving average, and then the weekly chart has supported 53.67. But I'm going to exclude that for a moment because I want to introduce a pattern in the monthly chart that we now consider to be fairly familiar. We've seen it happen many times in many stocks. It only happens in the stocks that have absolutely the very best technical indicators. And so far, the monthly chart of Whole Foods has a lot of repair work to do because of that very deep smash, especially the smash of, was it October of last year? It was May of last year where it went from 50.83 down to 37. And now it's time to do the repair. But the chart is looking really good. So this is what I want to give you the different perspectives, but I also want to mention that the monthly chart has a pattern that could very well, I could say, matches the chart formation that we were looking at before. And obviously, if I use that, I have to use it here again. So let me see if I've got exactly the same match to that candle right there. I go like that and I say new parallel, and yep, that's exactly what it does. So yes, it says that, but I can't believe it, by April, Whole Foods very well could be in the 60s. And if that's the case, I don't want to even think of suggesting to you to get out of the stock. What I would suggest to you is that some portion, because you've got a very nice gain, but some portion I would consider having a trading stop. It's at 57.18. I'd have a trading stop on some portion of it at about, give it a little bit of room, so 55-ish, somewhere around 55. You don't actually have to put it in as a printed stop that you place as a trade, but in your mind, say to yourself, if Apple at any point after, let's say, it makes D, and it starts to pull back and it takes out the candle lows of just recently of 57 to 56.60 made on the 17th of February, and that would be a little bit under the 9-period moving average. I say, okay, just some portion of it, have it ready there. But I'm hoping that it doesn't even do that, because what I would like to say to you is, if it has a fabulous, fabulous gain and it gets to the 60s, at that point I would definitely take something off, and I would put that money aside and say, I want to, the next big decline in the market, I'm going to have a lot of patience for. I want to go back into Whole Foods Market. Why? Because it still has that outstanding monthly U-shaped pattern that says, unless I'm making a right shoulder failure in the Chapman wave, and this has gone a little higher than I would have expected, because if it stalled at 55, I'd say, whoa, be careful. But it's kind of exceeded that level. It's really improving a lot. I don't want to get you out of a position that you got in. You've got a position trade. You've got, a position play. You haven't got a trade. And I'd like to think of it as a position. I'd like to say, Whole Foods, you've done really well. I went into the store down in Durham in North Carolina. They come up with wonderful ideas to refresh, constantly refresh. I think they've turned the company around from the slump it got into, and I would like to see that it has the temerity to continue higher, because the technicals are really good, and the stochastic at 93% in the weekly is saying not yet. When it does give you a sell signal, be prepared that stochastic could go down very sharply. It hasn't given that yet. So congratulations. I would hold the stock. I think you got in great. You've held it. I'm just expecting a little bumpy period when it gets to the leg D in the next couple of days, but my thinking is that on a weekly basis, it should still go higher.
Thanks, Basil. I appreciate it. Great analysis.
Thank you very much for calling, and thank you very much, and congratulations. You really have a nice position there. Thanks for calling, Robert.
Okay.
So this is what I'm looking at, folks. It's very interesting. The Dow, let me just check the Dow, INDU. And let me just do this while I'm here. I'm just swinging around because I want to go to another chart and just do a quick analysis over here to see the Dow stocks. I think it was Boeing possibly that was quite weak. If that's the case, that could explain why the Dow is a little bit weaker. It's down 0.28. The S&P is only down 0.23. So I'm just trying to check. Yeah, there it is. So you got UNH, oh my God, up 3 points as a Dow stock. DuPont is acting well still. I just want to scroll down here to see where Boeing is. Unless someone can tell me in the den. Save me the trouble. Boeing. Is it at the bottom? I can't do it quick enough. That's a little upsetting. Oh, there it is. Yeah, Boeing's down 3.82, but you got UNH up 3. I have to tell you, there's a rotation that keeps going on here, and it is amazing how they just keep rotating through the different sectors. One thing gets hit, and then something else in equal proportion goes higher. This has just been an incredible market. Everything about what I'm looking at says in the, I don't know what to call it because it's only 2 weeks' time. So it's in the shorter term, not quite intermediate term, but in the shorter term, I think we are starting to see signs that tell me at least that things are getting harder. And you've just made a leg E and a leg F in the HGX index. What is the HGX index? I showed it to my subscribers this morning. I showed them a very interesting chart. I wonder if I can go to it right now. Yeah. This is WOOD. Wood is the iShares Global Timber and Forestry ETF. Made a peak D, and last week it made a peak D. This week is pulling back again. And the HGX is, I don't know if it's going to make a peak D this week. This will start this rotation that says fewer and fewer stocks are going to act well from here, and then we're just going to get a nominal, we're going to get a week. Maybe it'll be this week, maybe it's next week, where there's not much going on at all. The market's starting to pull back, but there is still support. And then suddenly there's going to be this one-up spike. It might even be on a Monday or something like that, or on a Friday. And then the Monday comes in real weak and we start to pull back. That's kind of what I'm thinking. There's a lot of evidence to say that this market is getting tougher and tougher. Now look at this chart here. Look at this. The other one was the weekly HGX, Philadelphia Housing Sector Index. And now look at this. Bonds could possibly make a peak A, a single leg A up here, before they consolidate a little bit. And then in March, they have a very nice, bonds have a very nice pullback. This is yield, sorry. 30-year yield white, 10-year T-note yield, brownie gold, whatever that is. And then cyan is 5-year T-note yield. And look at that. What we've got here is a potential peak A, single leg A up, and starts to pull back. And then in March, it comes back down again. Wouldn't that be interesting? Wow. All right. Question about IYT. IYT is the iShares of the Transportation Index. It made a low on the January the 14th at 154.04. It retested it by going to 155.21 on the 30th. That means you put in your up. You've already got an up arrow. You got an up arrow there. Failed. Okay. There it is. So this is A, B. We're in leg B, possibly peak B today. Most likely, in fact, peak B today. There it is. And in the weekly chart, you've gone to an F/A. Well, it drives me nuts when I get an alternate count, and the alternate count says, oh, this could be really negative. Whoa, wait a minute, this could be really bullish. I mean, come on, is that an indicator? Is that an indicator? Anybody could do that. Because F would be saying you've got time and price to the downside. Well, you use time and some price, and you've used up 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. This is the 13th week. Hey, that is a lot of weeks in consolidating. And that says to me that this last low, 54.04, 154.02, could start another brand new A. And I've got an F in the monthly chart, but nothing about the technicals say that as of now, that's a peak F. It looks like a recycle A to B, and the next high will be a C. I'm not going to fight this. All I'm saying is that the transportation index has held very well. I watched UNP very closely. UNP has the same pattern almost. It went to a new high. I chose to call it an F/B. I would have to suggest that UNP, Union Pacific Corporation, trading at 123.23 right now, down 43 cents, needs 124.52, not very much more. It needs 124.53 to make leg C in the weekly chart. Oh man, these things are looking quite good. Don't be short just yet. I'll be right back. Basil Chapman sitting in for Larry Pesavento.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, folks, we're back. So just wanted to do this because it's been a fascinating sector that I've watched for a long time here. iShares US REITs, it's a real estate ETF. And I had a question. Hi, Basil. First, great webinar on Thursday. Thank you, Will. And second, if opportunity permits, could you please look at the IYR? I am short at 80.98. So 80.98 is trading at 80.21. It keeps having these little bounces, but there's that H pattern that I always talk about. There's the H pattern. It closed under the left side low, which says that next bar has to be a good bar going way back above the low that was made at 79.20. And lo and behold, the close was 79.11 on the 19th, and then the 20th had 79.13, 2 pennies higher. So this is a brand new leg A, but it's within the context of these arch formations. Arch there, another arch forming. Unless IYR, I don't know what your stop is, Will, but unless IYR can close decisively above round number 81, that was the high of the 13th of February, I think it's just going to make another H pattern. The 120-minute chart was very negative, but it retested, and it did a retest very nicely above the 200-period exponential moving average now and above the 9 EMA. But there again, it's used up a little too much time. What I'm looking at here is that this bar, right as we're speaking, should really be above 80.87, and so far it's not. So I'm suspecting that you have the right, you have the potential for the right position. The really big thing here is that the monthly is still very strong, and the weekly is sitting on the 9-period moving average with a fairly long-legged doji and a close anytime this week or next week above 90, 80.98 really, but 90, 81, I didn't mean that. I mean 81 would in fact be very positive and suggest they could get a U pattern, just as we saw a moment ago in, what was I looking at? I'll have to check out what I was looking at. In the IYT, I think it was. Yeah, Whole Foods, in the Whole Foods chart. And that U pattern could form. So as I see it right now, all I'm going to say to you is you can stay in the position. I would not, at this point, I'd have like a 1 point buy stop. This is me personally, at least on a portion, I'd have a 1 point stop. I might put it back if we arch over again, but if it suddenly starts to climb, because it's also a yield play, you see. So I was a little surprised that it dropped as much as it did, and then I was not surprised to see it just retest the other day and bounce. So I think if it's considered some kind of a dividend play, there's a chance that it could bounce quite nicely. If not, the moment it takes out, what you really want to see is a close below 80.43. The moment it does that, there's a real good chance that it'll continue going to lower highs and lower lows. As it is, it's going to lower highs and lower lows, but this H pattern right now is the first sign that there's bounced material, and that's all I'm saying. The 120-minute chart seems to confirm it's taking just a little, I shouldn't say that. I'd maybe give it one more bar, but the next bar better not go under 70. What did I say before? Did I say 80? Yeah, that next bar better not go under, if you're bearish, you want to see it close under 79.90. If you're bullish, you want to see it close by the end of the day, somewhere above this, a bar needs to close above 80.65. I think that's it. So stay in position. I'd have a 1.5 point stop on some part of it. I'm thinking it's just going to make an arch, another arch formation. But if it actually shows strength, you're going to see the stochastic go from 22% to 24%. So we just about run out of time. I had a real quick question. I don't know if I've done PHM in notation. Pulte Holmes, yes. So Pulte Holmes is holding quite nicely here. If you are long, I say it's at 22.50. Watch 22.20, 22.20 to 22. That's going to be key support. Okay, folks, thanks for being here. I have the opening call. Go to the front page of TFNN, and you'll get my webinar free, and you'll get a month free. I'll be right back tomorrow, and have a great day.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You're watching Tiger TV.